everybody. Welcome back to Earnings Call. My name is Jeffrey Beamer. I am the Senior Investment Strategist over at ewotrader.com. If you've seen this show before, you know what we do here. We don't just talk about earnings. We talk about how to make money off of earnings announcements, okay? We do this each and every week. So for this week, the week of June 8th, 2026, this is a lighter week on the earnings volume, but we still have several important reports coming across the fields of technology, housing, consumer, and retail sectors. After last week's tech meltdown, the group will remain on center stage with Oracle and Adobe. Now, this week we have 100 companies declaring earnings this week, of which this is the last kind of triple-digit week we have in June, meaning the rest of the weeks in June are going to be pretty quiet, which means focus will be really intense on the companies that do announce. And we have some big names coming up, even though there's not very many earnings. So from an options perspective, okay, traders are going to be likely to focus on Oracle and Adobe this week, but not only them, but on Lennar, which is a home builder, and on RH Group, which is the old restoration hardware, okay? This is where implied volatility and institutional participation are expected to be the highest. And the key here is guidance and forward-looking commentary that will be the primary drivers behind the earnings price action. So we're going to go through the list like we do every week. We're going to take a look at the best potential candidates for trades, because we like to do trades here every week. And I'll give you the trade update from last week and a new opportunity for you. We'll get started right now. Welcome back to the second week of trading in the month of June. We have a pretty quiet list. Out of the 100 stocks, as I mentioned, we are only covering about 10, maybe 11 of them. And part of the reason for that is optionality, the stock price. There's a bunch of stocks that are actually under $10. Which some have options traded on them, some do not. Okay, but here are the ones that really stand out. Now, on the left-hand side of the sheet, we have what we call the breakout stocks. These are stocks that, on average, move 10% or more through their earnings announcements, so double-digit movers. On the right-hand side, we have our quiet stocks. These are companies that consistently move where the stock, even after the earnings announcement, the stock moves less than really 9%. Okay. Sometimes, most of the time, our quiet stocks are below 6%. Like 5, 4, 3. Okay. On average, those are the moves. So we're going to start this week with this quiet list because this is where most of our concentration is. All right. And I want to start off with an example. Okay, so here's our list, zeroing in on it. We have Vail Resorts, which we'll announce later today after market close. And then we have Academy Sports, and we have JM Smuckers, okay, Casey's, Core and Main, Adobe, and Lennar. These are all the quiet stocks. Let's touch on these, okay? We're going to begin with Vail Resorts. Let's go ahead and start with an example. I'm going to show you a chart of Pfizer here. And Pfizer is a notorious quiet stock, all right? And I have the earnings announcements highlighted with the ellipse and the vertical dotted red line. And you can see that this stock just doesn't move. I mean, we're talking on average 3 to 4% through earnings announcements. So for these, we like to do a strategy that takes advantage of that non-movement through earnings. And that is an iron condor. Now, if you're not really familiar with this strategy, it's simply selling a call spread on top, selling a put spread down below. Combining those two trades together generates a credit. And we want the stock to stay between the strikes that we sold. Okay? That's really it. Very basic. Okay? Even though the strategy is what we call a mid-level kind of strategy, a moderately sophisticated strategy, because you're dealing with buy legs and sell legs, and you're doing two spreads combined together. Yeah, it can be a lot for a newbie, but there's a lot of information online about how to do this trade. Okay. And we use these because implied volatility rushes into the options. It makes options more expensive, and we sell that expensive option going into the earnings announcements. Okay. So let's take a look at our list. Let's jump in and look at the charts. Okay. So we're going to start with Vail Resorts. Now, here's the thing. Vail Resorts is a lot more than just Vail, Colorado. Okay. They own a bunch of resorts around the world. Okay. Now, if it was just Colorado, I would be very concerned because Colorado had very little snow this year. And someone that I'm close to has a home up there, and they didn't ski at all this year. Okay. There was some skiing available, but really it was that bad. Okay. And they're worried about actually water. Okay. Because the snow melt is not going to be as big as it was. So for Vail Resorts, normally I might expect a little bit more volatility here, but here's the thing. They are diversified. They have a lot of resorts. Okay. The average expected move here is about 6%. You can see the stock this morning was trading up almost 2%. So we'll see what they do after the market close. But this is a good stock to trade because it is over $100 and gives us a lot of option strikes to choose from. So Vail Resorts will declare this afternoon after market close. Average move is about 6%. Okay, now moving on through our list, we have Academy Sports and Outdoor. Now, as you can see here, this stock is trading right at 52 and a half. They will declare tomorrow morning on Tuesday, June 9th. Sorry about that. That is going to be the 9th. Let me correct that. Okay. Tuesday, June 9th, before market open. The average expected move here is about 7%. Okay. So it does move around a little bit, but this is going to be a good test for the consumer here with Academy. Big sports store. So we'll see how they handle results. But you can see this stock has been trading in a range. And what's key to note here is I'm not really worried about the overall trend of a stock, whether it's going up, down, or sideways. Yes, sideways is a trend. Okay. But I'm just concerned really with the earnings announcement. Okay. And at 52.50, this is kind of on the low end of the price where we like to do iron condors. Really, my bottom is around $40 and above. Okay. But still very doable here and a good opportunity on Academy Sports. Moving on, we do have JM Smucker. Sorry. They will declare also tomorrow morning. That will be Tuesday, June 9th. The expected average move. Now, what this number is, the average expected move is a combination of the past earnings announcements combined with how the market makers are pricing out the current potential move for the stock. Okay. And right now that average is with those two numbers, it's around 7%. Okay. So around 7% for JM Smucker, and they will declare tomorrow morning before market open. Okay. Now, moving on with the consumer here, we have Casey's General Stores. Now, this is a $700 stock. Okay. They will declare tomorrow, Tuesday, after market close. The average move here is about 8%. Okay. So you can see that Casey's has sold off a bit. It touched $900. Look at that. Just barely touched it and then rolled over. Now trading. Look at this. In the month of May, it literally went from $900 down to on June 1st was trading around at a low of $745. So from $900 to $745. This stock is a mover, except through earnings. Okay, the average move is about 8%. Look what it did last earnings event right here with this is where the earnings announcement was on March 9th. Okay. And a little bit of volatility here. The stock kind of moved up a little bit, but you can see that it just was trading sideways. Perfect for selling premium into the earnings announcement. $700. The problem with this high of a stock price is that oftentimes on stocks that are at this price, strikes are every $10. Okay. And that's where you got to watch it. I try to keep my risk in these positions well under 5% of portfolio. And if you're dealing with a smaller account for a stock like this, it's a little difficult because when you do a spread and your strikes are $10 wide and you're selling that spread, that risk is $1,000. Okay. $10 wide spread, $10 risk times the valuation of an option, which is times 100. Okay. That's $1,000 minus your credit. Now, if your credit is $3, okay, that means your risk is going to be $7. All right. Your risk is going to be $7. So with your max risk minus your credit. And but the problem is oftentimes we can't get them for $3. It might be $2. Now you're risking $800. And for a smaller account, if you have a bigger account, fine. Cases will be fine for bigger accounts. You just do fewer contracts to keep your risk down. That's all you need to do. Okay. All right. Moving on, we have Core and Main. Core and Main will announce earnings results on Wednesday, June 10th, before market open. So in the morning. The average expected move here is about 8.25%. Now that's interesting. Stock had a decent move last earnings announcement, but you can see that it really didn't violate the trend much. So, and being a $50 stock, I would look to see what opportunity is there, but probably not for Core and Main. Okay, just because it usually is a moderate mover. That's usually on the high end of what we like to see for movers. And for right now, with the limited number of stocks that really qualify for our strategies here, that's okay, because this time of year, meaning this time of the earnings cycle, we trade a little less. Okay. And then when earnings really heat up, we trade a lot more. All right. It's a simple fact. All right, here's one of the newsmakers for this week. This will be Adobe. Okay, currently around 245 on the price. They will report on Thursday, June 11th, after market close. The average expected move here is just 6.6%, so just under 7%. You can see last time we did have a little gap down, but that was about it was under a 7% move right there. Okay, that was actually right at the expected move, around 6 and change. Okay, so and then look, the stock just goes sideways. All right, so good stock to trade, nice valuation at 245, lots of opportunity here, and we'll visit Adobe here again in just a moment. Let's move on to Lennar. Now, Lennar is a home builder, so this is why it's going to get all the attention this week from the side of home builders. Interesting in my area, we've had such great momentum with building. Now they're almost oversupply, which is like, who thought that could happen? All right. Now, Lennar will declare on Thursday, June 11th, after market close as well. The average expected move here is 6% as well. And you can see, look at this. Last time, you can see that it was in a downtrend. Then on earnings, look what happens. You get a little volatility through earnings, and then look at this, sideways, 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 sideways. Okay, very nice. Perfect for an iron condor at $90. We should be able to find some opportunities there for Lennar. All right. Now, that is, believe it or not, our list for the quiet. We do have a few breakout stocks that we should probably talk about. Okay, because let's go and talk about breakout stocks for just a moment. Okay. Let's take a look at the list first, and then we'll look at an example, and then we'll get into the list. Look at that, just 4 stocks, and I'm only going to talk about 3 of them. Why just 3 of them? Well, because these are the more well-known stocks, the more optionable stocks. Jill right there, which is J.Jill. It's about a $13, $14 stock. It would be a good candidate, but often with stocks that are around $13 or $14, you got to get your debit. And I'll tell you what, J.Jill, you know what? I'll add that in here. We'll take a quick look. In fact, why not? Let's look at an example of a breakout stock, and then I'll talk about J.Jill, and then I'll talk about the others real quick. Okay. So here's Akamai. All right. Now, Akamai and Pfizer, which I gave an example of earlier, they do not have earnings this week. These are just examples. And I wanted to show you kind of a quiet stock with Pfizer. Now, this is a breakout stock. Akamai has it's a mover. Okay, Akamai has an average move of uh, double digits. It's usually around 13-14% for Akamai, and it moves. You can see by the ellipses here. There's always a gap. There's follow through. It's just a big mover. And the last earnings that it just had a few weeks ago, you can see the big move. I mean, just over 20% move on stock. Now, for these, we like to do straddles and strangles. Okay. We like to buy volatility because we get volatility with these stocks. They move around through the earnings events. Okay. And so there's usually a lot of volatility here. So let's talk about our list real quick. I'm going to see, I know, let's go to the charts here real quick. And here's Lennar that we got away from. Let me see if I can pull up J.Jill. I had a little data issue with this. Okay, there we go. Okay, so this is at 13:45 today. And you look at this. This is the last earnings event right here. Okay. That's the last earnings event. You can see a big gap down. So it moved literally from 1497, okay, 1499, and then closing the next day at 1147. That's a big drop. That's double digits move right there. Okay. And this is great for smaller accounts. The problem is oftentimes you're going to get a debit for your call that you buy. It's going to be around $1.10, and then your put's going to be about $1.10, and then it's $2.20, and it's going to require a 20% move just to profit. That's where you got to be careful, and that's why I didn't initially include it, but I do want to give you an example of a smaller account a trade, and I've got another one for you here in just a moment. So let's go through our list real quick. In fact, okay. Normally I show the list, but we've only got 3. So, heck, we showed the list, I think. But anyway, Oracle. All right. This between Adobe and Oracle, these are really the 2 big names this week. Oracle is typically a mover. Okay. And now it moved gapped a little bit that last earnings announcement. Okay. But if we go back, you can see this thing gaps around. Nice big drop right there. Okay. If we continue to go back, you're going to see this thing moves. Okay. It can move. All right. So that's why this is, and we go back and we look at all those moves, and then we look at where the option pricing is. Right now it's about 13.5%. Okay. A big mover. So we do a straddle or strangle here. Here's the problem with a stock like Oracle at $212. The debit for straddle or strangle is probably going to be between $2,500 and $3,000. Okay. And that's why it's going to be for larger accounts, usually for maybe $20,000 and over. Probably for a $2,000 debit, I would say $40,000 and over. Okay. Trading accounts that are probably $40,000 and over, that would be, those accounts you could look at Oracle. And again, even like if I had a $40,000 account and I was looking at doing a straddle on Oracle, I'd do one contract for the call, one contract for the put. Okay. If I had a $100,000 trading account, I might do 2 contracts or maybe 3. I mean, keep it small, folks. I mean, be very careful with these because sometimes, you know what? They don't move. All right. Or they don't move enough. And that's the trick. What we try to do is get great pricing. And if the pricing's not there, we don't do the trade. All right. So that's Oracle. All right. Now, Restoration Hardware, they just call themselves RH. I mean, what a boring name. Anyway, my opinion. They report on Thursday, June 11th, after market close. Now, here's the thing. Guess what also happens on Thursday, June 11th? That's the SpaceX IPO. All right. SpaceX IPO. Where do you think all the attention's going to go? It's going to go there. All right. So could we have bigger volatility here? Maybe. All right. Again, consumer. How's the consumer doing? We have CPI this week, I believe, and consumer price index. And where's the consumer going to fit in here? There could be some volatility. Look at the last earnings announcement. This stock literally went from a close of 139.82 and opened the next day at 112. Okay. How does that make you feel? One day you're looking at your stock and it's $139 and you close your eyes and wake up the next day and it's $112. Well, I can tell you, if you have a straddle or strangle on that, you're probably thinking, no, I'm feeling pretty good. Okay. Again, it depends on pricing. $149. It's going to be $700-800 for a straddle or strangle. And again, I'm just kind of guessing just from experience here. Could be minimum. It could be upwards of $1,400-1,500. I honestly, not $700 or $800. I'm talking about per call and per put. Okay, $700 per call per put. So again, on the pricier side, bigger accounts, maybe $25,000 and up can trade RH. But yeah, it's all about the pricing. And but here the expected move is 16%. The average expected move here is about 16%. So this thing is a mover, and it has moved before, okay, on a regular basis. Now, for smaller accounts and for everybody, okay, we do have Lovesac. We've traded this several times. It's a lot of fun to trade with a straddle or strangle around earnings. They report Thursday, actually before market open. Usually I like to do the before market ones first, but that is June 11th, Thursday morning. The average expected move here is 18%. Okay. So if you can get $1 for your call, $1 for your put, anything less than that, around maybe under $2 for your straddle or strangle, that might be worth doing. Okay. But yes, these are affordable, but it's got to move. And last time it had a bit of a pop, but I think that was enough to cover, because it literally went from 1129 to 1376. So near break even. But this stock in the past has shown some considerable volatility around earnings and usually gaps around. But the pricing, again, taking all those averages and combining them together and then looking at what the expected move is, man, it's pricing in at around 18% right now. Okay. So something to watch out for. All right. That's our list this week. But before you go, and before we go, let's talk about trades. Okay. We had a trade last week, and we're going to start with that, and then we'll get into this week's trade. So let's take a look at what we got going on. Last week, we did a trade on Samsara, company called Samsara. Now, IoT is the symbol on this. And we did a strangle on Samsara, and we were looking for a little bit of volatility, which we got. Unfortunately, it wasn't as big as we like. So let's take a look and see what happened. Okay, because honestly, we're still in the position. Okay, now this alert goes out through a new opportunity that we have called Earnings Club. Okay, Earnings Club is where I send out these trade alerts to you by text and by email each and every week. I update you, I provide commentary, and I tell you when to get out. Okay, we have an introductory price that is a steal. Next week, I'm going to reveal the link for it, but it is open if you contact EWO support. You can get the link, but it is definitely something that it's live right now, and we are trading it. And we have quite the track record, because if you've been with us for a while, you know how well we've been doing. I mean, we've had some great success here. Yes, we have a loser every now and then, but just consistent winners on a regular basis. All right. And so for Samsara here, it's still open. Now, Samsara, believe it or not, we were expecting about a 12% move on Samsara. We did not get that. But since the stock declared earnings, okay, it's down about 11%, okay, and dropping. So we're still in it because we're really close to profit here. It was showing a little bit of profit on Friday because implied volatility went nuts when tech sold off. Okay. Even the options here got expensive. Okay. But we're a little underwater right now as of Monday, and we're looking for a little bit more drop, and then we'll exit, but we have to exit by Friday. So, our readers and subscribers will get the alert saying when we exit. But if you were looking at this last week or over the week, yeah, we're still in it. And I'll let you know how we did with this next week during earnings call right here. All right. So let's talk about the trade of the week this week. Okay. The trade of the week is going to be Adobe. Okay. Adobe. We have an iron condor on Adobe. Now, remember, we're only expecting, about a 7% move, a little less than 7% move for Adobe. And the option pricing has been really attractive. So we sold a call spread on top, sold a put spread on the bottom, combine these together. You get both credits, okay? And the spread here is $5 wide, so $5 minus our credit, which was $1.35. We got filled at $1.35, and I'm looking at pricing right now, and it is the mark right now is $1.34.5, so it's right at our price. Okay, and that is our trade for this week is an iron condor on Adobe. All right, and next week I will update you on how this trade did. We're looking for earnings on Thursday after market close, and then the move Friday, and then boom, we'll be out of the trade. So come back on Monday to see how we did, and also for an update on Samsara. And I will have a new trade for you hopefully next week. But our earnings really drop off for the next couple of weeks as we head into an interesting holiday period. We have Juneteenth coming up in 2 weeks, okay, which is a Friday, and markets will be closed. And then 2 weeks later will be, believe it or not, 4th of July weekend. 4th of July falls on a Saturday, so Friday, June 3rd, markets will also be closed. So really kind of a weird holiday week period coming up in a few weeks. And Thursday is just going to be a big day this week. So watch out for the SpaceX IPO. Crazy, crazy volatility there. We also have the World Cup starting on Thursday. Lots going on. NBA finals, NHL finals. My goodness. Lots going on. Some of it not trading related, but everything's related to trading. So we all keep an eye on it. So everyone, thank you for joining me today for this session of earnings call. And I will be back with you next Monday right here for the next edition next week. Have a great week. Take care.